Good morning, everyone. Welcome to what used to be Market Monday. I got to figure out a new clever name because this isn't always coming out on Monday. It's coming out more when actual information is coming out. Anyways, I want to do a quick video and send it out there, and I'm bringing up pages as I'm talking. My name is Nathan Graham. Hopefully, we've met at some point or another. I'm just going to give you a quick update on what exactly is happening in the real estate world in this newsletter. Okay, so let's get started on it. The big news today is July 24th. We had our second rate cut in a row. This was very predicted. I think September we'll have another one. So first of all, when we look at interest rates, we are beginning to see the decline, which is fantastic. Where to begin? Inflation data in Canada came in low, which is a good sign. It's never a good sign when people are losing jobs, but unfortunately, that's what's needed for the rate cuts. The economy and the way the government runs is kind of crap that way, but whatever, it is what it is. So our unemployment rate went up, which issues another potential rate cut. And big news, I think, that came out of the U.S. is their inflation started coming down too, which has started triggering their talks of rate cuts as well. So I think that's another leading cause why we saw it. So it was fantastic news today about that. Now, the markets are reacting overall. So again, for those who don't know, the rate cut they're talking about today affects your variable rate. The rate cut bond rates, which I'm about to show. There we go. Your bond rates are what affect your 5-year fixed, right? So what we've been seeing is when I started doing these videos in December, our 5-year fixed was sitting at around 5.5, and it's now dropped down to about, I would say, I think I saw it today. Well, we'll check it out in a second. Doesn't matter. It's like 4.5. But here's what we're seeing. So I'm going to go on let me go on a 6-month chart. This is what we're seeing for the bond rates. We had a whole bunch of fluctuation into last year. Let's narrow it down to the high points. This is what we saw coming into May. And as you can see, we started seeing these dips start to come down. We're at one of our lowest points. This is what's going to affect our 5-year rate, which in turn, let me just quickly show you because we're already seeing that effect happen today. So yes, rates overall did come down. Let me just pull this up. Sorry, guys. I just go to Rate Hub, by the way. Definitely talk to your mortgage broker, talk to your bank, and all the rest. But as you can see, rates yesterday were at about 4.565. Now they're at 4.54. So we did see that drop, and that's coming down. And I do predict that this is going to be coming down more and more and more as time goes on. So that is great news for anybody waiting to get into the market. Now let's talk about the market. One of the reports that came out at the beginning of July was listings were up, sales were down, but the average sale price was staying strong. Home prices were not going down; they were actually going up. So sellers are holding on to what they want to get for their house. They're not making a move unless they get it, which means that's what's keeping the strength that goes in behind it. The other thing that we're happening, and this is kind of a mixed thing of what we're seeing in the market. Okay. You are seeing some homes sit for a long, long period of time. And the reason why they're sitting is because a lot of times they're trying to get back to the previous sale price that would have got in 2022, and that they're just listed way too high. And I'll give you an example. I just sold a house. My clients, this is a parallel of two markets to give you an example. They were listed at $1,050,000. We got it for $900,000. We got it $150,000 off because they were listed too high. Had they listed at $999,999, we probably would have been paying closer to $975 for the property, but we got it at $900. Now the reverse is happening, and this is what I also want to talk to you about. The multiple offer market is beginning to come back. It's heating back. We are seeing home prices. It's not going crazy, but we're seeing get the multiple offers. I listed a house at what did I list at? $799,999, and we got $850 for the property, with 3 to 4 offers on it. I had another one where we got $70,000 over asking with only one offer on the property. We are seeing the multiple offer come back, and homes are selling in 5 to 7 days when it's positioned properly on the market. So that is one of those really big things that I want you guys to become fully aware of, is if you're sitting on the sidelines to buy, home prices are creeping up. I do recommend start buying right away. And as you're looking into August, July, by the way, our July slowdown seems to be done. Last listing, open houses have been crazy. Showings have been good. We are seeing the multiple market offer start to get the value of home. So if you are thinking about selling your house and you want to have this conversation about the best time, Let's have the conversation. August, September, October, we are going to see a jump in the market, and this interest rate announcement is just going to help that. So it could be a great time to make that step up. Last thing I'm going to say, if you are looking from in town, say in the Durham region, and you are looking to move out to Lindsay, Peterborough, or surrounding areas, that can also be a very good time right now as well. We are finding that those surrounding area markets are slower than the in-city markets. So if there ever is a time to make that move, it could be now. Again, let's have a conversation. Everybody have yourselves a great week. I'll give you an update on the next big announcement. Have a good one.